Hello everyone, welcome back. So today I think it's going to be really interesting, as in this video I'm going to share with you all that how to read the charts, how we can read them effectively, and it is going to be really exciting for those who have just started trading, but they're not very sure where to take the entry, where to keep the target, where to place the stop loss, all those technical points. So what I'm gonna do is I'm gonna step by step walk you through on this chart, and will try to share that how you can read the chart effectively, and when you will learn how to read it, and with little bit of practice you will be really amazed that how easy it would become to to trade once you know what you are looking at, once you know that what exactly is happening at the moment, and how to take the appropriate action. So before that, let me just tell you something about myself. By definition, I am a pattern trader. So what I basically do is I try to read the price action, and then based on that price action, I try to read the patterns. So and there are other multiple concepts. So I analyze them, and then I take my trade. So for my intraday trades, I usually trade in Nifty or Bank Nifty almost daily. Uh, Almost daily means that whenever I have the right opportunity, I take the trade. So with practice, you will also be able to take the trade. And when when you can trade effectively, you'll be very amazed to know that you'll be very easily able to generate profits consistently, and those either big or small profits will help you to meet your day-to-day expenses. So if you are in a full-time job or in a business, uh, if you can just meet those extra expenses with trading, that is where all this hard work will pay out. So let's analyze the chart and let's see how to read it. uh, there are other a few points before that. As I said, that apart from reading the candles and reading the support and resistance, and all the other technical things, it would not be possible to tell you everything on one video, because I mean, I can just spend a whole hour talking about just one pattern. So what I'll do is that I will walk you through briefly on this chart, okay, so that it will help you to make some background about chart reading skills. So let's begin, and we'll also try to divide this chart reading video into some other parts, so that we can combine and create a series out of it, and so that you will be able to read, learn how to read it step by step. So that said, on this chart, just look at the chart and think that what all things you can see. Although I have already marked some green arrows and some support and resistance lines here, But just ignore them for a while and just try to see what you can see here. Okay, so let me begin from here. So this is a 5-minute chart. So we are not sure that on this particular day, what was the trend on the higher time frame, and how was the overall environment in the market. Was it bullish or bearish? So just based on what has happened in this time frame at this moment, we'll try to read the chart and we'll try to see, okay, where we can place the trade, how we can take the best opportunity that market has thrown. So we can see that if we start from the extreme left, we can see that the prices have very fluidly they came down. That shows that the environment was very bearish, and prices were if there were any support to the left, they have broken all the support areas and they just came back down. And after coming down this fast, they try to stabilize at the rising 50 MA. So we have on the one hand a downward sloping 20 MA, and on the other hand we have the rising 50 MA. That means that prices were not in a very trend, not in a good trend when they begin to break down. So as soon as the prices reach to the rising 50 MA, they try to stabilize here. However, they were they couldn't able to do anything much, and they closed below the 50 MA. Then again buyers try to step up, and they try to bounce back from here, and they bounce back, and as soon as they reach to this level, now many people will say that they took the resistance at the 50 MA. However, let me tell you that these moving averages are subjective. They are subjective in nature, and they do not act as support or resistance. It's just that the 50 period moving average and the 200 period moving average are so widely followed that they become a self-fulfilling prophecy. So not the 50 MA, I mean, that could be one reason. However, if you see to the left, there is a cluster of prices. So as soon as the prices bounce back and they reach to this area, the sellers again came back and they just moved the prices to the lower side. Now again, when prices they came down hard, they tried to took support at the flat 200 moving average. Now this is again one reason and evidence which shows that moving averages are very subjective, because if they really provide some support, then prices should stop here and they should bounce back. However, that was not the case. They took support, either it was the profit booking, or some people might have tried to buy at the 200 moving average, but that was that buying got eventually failed and prices came down back. Okay, they broke the 200 period moving average and they came back down. Now this was one day where we have seen the strong selling. So what happened next day? Now next day prices gapped up. Okay, they open gapped up, but a logical trader would see that although it was a gap up, but then where it gapped to, okay, it gapped open, but where? So we can see that it gapped to the prior resistance area. So so far what I have said, you can, if you are paying attention, you can realize that I'm, time and again asking you to pay attention to the left, to see what is happening to the left. So if you know, see what prices are doing currently, in comparison to what has already happened to the left, you will get a lot of information from there. So as soon as the prices open gap up, okay, but the gap up, to the prior resistance area, the selling again came back. Okay, we have seen the selling. However, on this day, the sellers were not that, aggressive, or I would say that they were not in control. So what has happened is that, prices came down, they tried to bounce back, they again came back, and they tried to retest this area. They retested this prior low area, and from there, the buyers gradually, taking the control. So after this event, we have seen, one event bar. This was the signal bar. This was the first signal bar. It was a wide range bar which closed at its high, and it has also, cleared all the resistance from here. So, an aggressive buying would be, above the signal bar. So as soon as prices, move above the signal bar, we could have taken a small position here if we are, not very sure that what is going to happen. And one reason was because we still have the downward sloping 50-period moving average. We could take a small position. We could have placed the stop here, the first initial stop here, or we can, even go down further and, place our stop the recent low, the recent pivot low. If you are placing your, stop here, then, being big wide stop, you have to share size it accordingly. That's one thing. If you are not very sure, and if you are seeing, a downward 15-period moving average, and you believe that, the prices might go down again, you could have, ignore the signal area, and you can still wait. You can still wait for some more data to see what could be the, how could the prices would react further, and then we will go ahead and take the position. So now what has happened after this? Prices, came down back, okay, and they have completely taken out this wide range bar, which is again bearish, which means that all the buying which came here was actually negated. Okay, but as soon as the prices came back, to this support area, this was the minor support area, they again stabilize, and we have this pullback bar. Now, after this pullback bar, either we could have gone, we can take entry above this bar. That is also fine. There is no issue in that. And you can, place the stop here. And I would say that this is a much better entry than this wide range bar. Why? Because you are getting a better risk reward here. Okay. Then prices, we have seen the fluid move up. Okay, this, and then if you pay attention to this bar, it was a red ugly bar when it was forming. However, eventually, buying came up, and it closed, at above 1/3 of the total range of this bar. That shows that, bulls are very aggressive on this day. So, after, moving in a, in a consolidation, in a range, and this is what I call as a time consolidation, where prices did not fall, or they did not pull back much, but they, they just consolidated in a range. after this time consolidation, we have seen this, topping tail. After the topping tail, the expectation was that prices will go down, but that did not happen, and that again shows that buyers are aggressive. And then we have again a very strong bullish bar, which closed at its high. Now, if you pay attention, after by the time we have reached to this bar, it was sometime, it was during the day, sometime around 1 or 1 p.m. or so, and we have almost all the three averages are upward sloping. This was again a very bullish signal bar where we can take the trade. So as if you remember, I mentioned in my previous videos that 99% of the time, whenever a signal bar generates, we will take the entry above the signal bar and we will place the stop below the signal bar. So the stop, if you are taking the entry above this bar, we can either place stop at this red line, which is below all this support area, or below this bottoming tail bar, where the buyers stepped up very aggressively. Now, if you have taken the entry here, okay, you have seen, you can see that the prices move very fast. The prices have moved very fast, very fluidly. Now, when such thing happens, after you enter the trade and prices fluidly move up, one of the best way to place your stop is to the prior bar's low. So if you have taken the entry above here and you have placed your stop here, what you can do is you can simply after the two bars, you can place your stop here and then here and then here. That way you can simply trail your stop, and eventually you will be stopped out at this bar, right? So this is one way of reading how the price action is forming and what message it is giving. And this is one way of trading professionally. Now, as I said, that just a signal bar or just the moving averages cannot be a reason to place the trade. There are multiple concepts which we also have to consider, and probably we will talk about it in some other videos. Okay, so hope you have liked the video. If you have really gained some knowledge from it, please give it a thumbs up, share your feedback, subscribe the channel, and share it with your friends. Okay, and just tell me in the comment what else you want, and probably I would be able to do it in the other videos. So that being said, let's call it a wrap, and we'll catch you up in some other video. Bye for now.